Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver here. It's the week of June 15th through the 19th. We have a pretty busy economic calendar this week with some high impact news. We'll take a look at that in a moment. Let's talk about all things stocks, Forex, and cryptos. Before we dive into the charts, let's understand there's risk in trading. Please and always use trade capital only. Thought it was going to be fitting to talk about round two. Why did the stock market have a huge nosedive last week? If you talked about the price on Thursday, it may have been enough to get your attention because we saw a massive drop last week. In fact, the Dow Jones ended up finishing around 5.5% in the red last week. The S&P was down just shy of 5% at 4.79, again in the red. The Nasdaq down 2.25%. Bitcoin dropped as well, but still holding strong above $9,000. It closed around 9,400 on Friday. And the 10-year Treasury up fractions of 0.1%, like 0.70%. But the big story was, round two of coronavirus, right? New hotspots, new spikes in cases since Memorial Day. And this should come as no surprise. In the U.S., we've had a lot of civil unrest, and there's been large gatherings, protests, peaceful or violent, but a lot of people together. And coronavirus isn't just going away. So although it hasn't been really in the news, it's starting to cycle back through again. And that was enough to get the market's attention last week. We saw a huge single-day drop in the Dow. In fact, I think on Thursday, the Dow dropped like close to 2,000 points. I'd have to look and see exactly what it was, but massive drop. Now, of course, that also comes on the back of the April and the May rally. We've seen a 40 to 45% recovery in a lot of the stock markets. The Nasdaq actually touched new highs, which is insane. But I was getting ready to look at a spike up in volatility and starting to short or wanting to short some of those stock market levels once again. So, coronavirus is kind of the one thing that's putting a stranglehold on the markets. Any type of vulnerability that the markets have can be exacerbated and accelerated with coronavirus. And again, we hope that it's not another kind of mandated stay at home, social distancing. I mean, sports are starting to open back up for the first time. I was checking out golf this weekend. And other sports are coming around here pretty quickly. You've got some players that are ready to play. You've got others that are saying, "Hey, not yet," like basketball. So anyway, I think that this is a fitting picture here, round two, right? I don't want there to be a round two. I want the social distancing and the ability to open and have some new protocol, have a new normal, but still, and most importantly, allow businesses to stay open. If we have a full economic shutdown, not just in the U.S. but globally, again, I mean, you can't help but think how traumatic and awful that's going to be for the economies, number one. But yes, the stock market's going to fall, right? But this goes deeper than the stock market. We've clearly seen a disconnect between the stock market and reality, the stock market and economies, right? But the real stranglehold on the economies and how, small businesses to large businesses will be struggling to get through this. Because at some point, I know in the US that we're going to have stimulus checks that are running out by the end of July. So if there's not federal support, and this goes not just from the individual level, but also now they're talking about states, municipalities, and helping out, from a federal level. And if that doesn't go through, then we really can't. I don't think any country can afford to just close and shut down. So it could be a very difficult next couple of weeks. And of course, the consequences would be absolutely catastrophic and dire. So I hope that's not the case. We hope that, round two, as far as, yes, there's an uptick. Yes, we're seeing hotspots in cases. But again, we go back to what we just came from. Have we not learned anything for the last 2 months? Yes, it's great to come out of quarantine, but it doesn't mean that everything is back to normal. Again, we're traders. We're going to focus on the technicals this week for stocks and Forex and cryptos. But let's hope that we just learn from the last 2 months and not have it be like an immediate repeat of worst case scenario. So anyway, moving on. I have some videos out there that I'll be getting out hopefully this week. I have a couple that are ready to get edited officially and polished up. So that's part of my Keep It Seriously Simple video series. Let me go ahead and move this over here. So on my YouTube channel, just type in my name, Chris Pulver, and you should see the channel pop up there. A lot of my videos, the best trading strategy, keep it seriously simple, talking about all things like trend lines, support resistance, price action, patterns. I'll be doing some tutorials on several charting platforms using different brokers. So I've also had a ton of requests come in from the comments, and so if you're seeing videos like this and you're subscribed to my channel, like these videos, please. I really appreciate it. And I've taken all those in. I've got just a big list of videos I'm trying to knock out here over the next month or so. All right, and I'll keep building. So you ask it, I will do a video on it with pleasure. So, all right, let's go ahead and talk. These are my outlets here on social media. I am posting videos like this, my weekly outlook on IGTV. So if you follow me on Instagram, you can also send me private messages or those direct messages on Instagram. It's at pulver.chris. On Twitter, I'm just tying all these things together. So at pulverchris, Facebook and YouTube, just type in my name and you can find me. All right. Last week we had some news. This week, starting off today's trading, the markets are in the red. So let's take a look at the dashboard really quickly. Futures down. Okay, you can see right here, top headline of MarketWatch.com: Dow skids 500 points amid fears of coronavirus resurgence. So that's what we talked about last week. That's why the markets were so nasty last week. Gold is down off the highs at $17.50. Oil is down off the highs around $40. The global Dow, everything is in the red. Futures market as well, down today. U.S. markets down. It's not a surprise. This is what is kind of gripping the market. We're not a full recovery. So that big V bottom that everyone's talking about, not so much. So like I said, it's not really a joke. When you see average investors or average just people that are talking about, wow, what a recovery, we're not in a recession, or just in denial, when everyone thinks that it's truly a V bottom, or what do I start to buy now, that's the time to be looking to sell. And that's exactly what happened last week. We got to those, the NASDAQ hit new highs. I had a WTF alarm go off. The S&P and the Dow were up near those highs, around like a 80+% pullback from the February high to the March slide, and it just ended up having a great sell-off on Thursday last week. And we fought back a little bit for a pause on Friday, but again, continuation today, risk-off trading. Here's what it looks like in the currency strength chart. You can see that we have, and it's started to settle back in, but what you see early on, take a look at this. This is pretty much a really good example of risk-off. So currency-wise, you see that we have the yen as a very strong currency pair, the dollar, the Swiss, the euro. Those are by far, as far as your currency pairs, your crosses, your majors, anything that is showing yen strength or dollar strength or Swiss strength. And we're now even throwing in the euro as a safe haven currency pair. And so your risk off here at the top showing the strength, and your risk on showing the weakness. This is your Aussie, which, as we saw back in March, was by far the weakest currency pair. So the Aussie and the New Zealand resuming that weakness when you have a risk averse environment. The pound and the CAD as well. Again, starting to balance out for the rest of the day. This was the active zone overnight around 2 to 3 a.m. Eastern time as the London session started to kick off. And, you can see that risk on strength. You can see that risk off weakness, but everything is starting to balance for a Monday. I would expect this tone to continue. I am still looking at Aussie weakness. I am still looking at New Zealand weakness. I want to take a look at some of those currency pairs today. What does that translate into stocks? Well, we should see a weaker SPY. We should see some bearish candlesticks forming on those larger indices. So let's go to the SPY really quickly here, start on the larger time frame. So here we are with the current price showing that the market's gapped lower. They're trying to fight back for today so far. But Thursday was really where the structure started to peak up, and the kind of the scariness ensued. Now this is the S&P 500, or the ETF that reflects the S&P 500. We did not take out the February highs, unlike the NASDAQ. Technical levels, what we could see here, if we see these lows getting retested, and those lows are back here in April and May, right around 270. Now we have this low. We have our low from last week. I do expect the risk-off trading to continue. If for some reason this market decides to still fight back, and we have kind of a counterintuitive move where the bulls somehow pop up, and there's still some bullish days ahead this week, this is starting to set up again a really fantastic rising wedge. And if we come back to this area from February and March, we come back to that high in February, I would definitely be looking for all of the technical reasons to short. All right. So that may not be the case. We might not go any higher than today. Today is nothing more than a pullback, and then the momentum continues to the downside for the rest of the week. If we do come back into these lows, so I'm providing a couple of price action scenarios here. If we do come back into those lows from April and May, then what I'll be looking for is this. If we challenge these lows, challenge the low, pull back, probably have some more indecision over here, we break the lows, then down we go. And that would be a really classic head and shoulders pattern. That would be bearish. You look for that confirmation to sell off. Expect there to be some noise and indecision around that neckline. That's typically what patterns are doing nowadays is traders are positioned here. Traders have orders there. And what they do is they get filled and then price comes back up and retest, but it doesn't invalidate the pattern necessarily. So that's one thing I'm looking for is either this low gets tested and challenged for some indecision before we break and go lower, or this actually makes a very fierce break to the downside, shallow pullback, goes back down. Okay, we might come back up and still have indecision before heading lower, or we just break, pull back, and go. And there really is no right shoulder, there is no right tip of the crown, it just falls. So price action wise, we'll be watching kind of day by day and see how things unfold with futures in the stock market. Sentiment wise, things are definitely taking a turn for the worse. Unless there is a little bit more of an optimistic news cycle coming in that coronavirus is under control or hospitals are doing a much better job now or this kind of round two for coronavirus as it were before or than they were before. If that's not the case, then I think we will still see some aggressive slides in the market. And one thing that the stock market tends to do is price ahead. If we are looking at some major contractions again over the next couple of months or the next 6 months, then I don't understand how the stock market can somehow carve out these new highs. I think that would again, bring up the case of there's no way this is possible. Now, whether or not I want to be on the other side of that trying to short the markets, that remains to be seen. I was ready to short the markets this year in January, February. I was holding on to, VIX positions and inverse ETFs since December of last year. So I was willing to say, I know we're going down early this year. But for this second go, I don't know if we're going to do it with the same type of volatility that we did the first time. So, I mean, look, we could still come back up here, have a rising wedge formation, right? We could still have a rising wedge formation. We could still have this perfectly tested top and have this thing just start to drop again. Okay, now it could drop very quickly. It could drop really slowly. We don't know, and I'm not the crystal ball holder. All right. But, this was an easy way to hedge and make money, knowing that we would have an inevitable correction. This, if we just go from high to low, back up to the high, back down to the low, I don't know what the volatility is going to look like. So, do I think that's the smart answer? I mean, I don't know. I'm not. I don't think I'm going to take those chances. I mean, I think what I'd rather do is trade currencies and just kind of sit and wait and cash in all the profits that I did from March and April and be a patient trader, patient investor. I've talked about this now for the last 3-4 weeks. Every position I've taken stock wise that I've cashed in for short term gains, I'm taking those profits and I will apply those later. I strongly believe that we will get better entries. I think we will revisit some of those lows that we saw back in March on some of our favorite stocks. And if you're patient and those levels get retested, or even companies that you want to buy that are super expensive that have done well during coronavirus, like Facebook, like Netflix, like Google, like Amazon, I think if you're looking and you look at levels from March and you look at these, great prices that you want to buy from or buy at, I think if you're patient, you'll have the chance to see those levels again. So, maybe that's wishful thinking, that maybe that's me holding out for it and not missing out. But like I said, I just can't justify buying at 11-year highs with this type of environment right now when I think it's easier for the market to fall. And maybe the market hangs on for dear life and the election is really what the next big catalyst is. Fine. I'll be super patient for the next 4 months and wait until November. All right. But I'm still going to be a patient stock investor and I'm going to be an active Forex trader. So that's pretty much summing it up. And I've talked about this routinely in all these weekly ALEC videos and in my trading rooms, because that is, I think, a good way to be battle tested going into the next couple of months, get through the summer, which we expect to see some range bound trading. But in order for range bound trading to begin, we have to have some highs and lows established. So stock market wise, let's move on. I mean, this is going to be a driving factor with what we're doing in the stock market. When this is red, we're going to look at something like the VIX. Here's one way to take a look at it. Here's the VIXY. So you can actually trade the VIXY. And this is looking for, we came down to lows around $24 last week, and we had this big spike up to around $36, almost $37. Now, are we going to continue to reset our volatility down to these lows, or is this now a new height? Have we, had this trend line broken? Is this structure breaking where now we go up, we pull back, we see sustained volatility? And if this is happening, if the VIXY, the VIX, the TVIX, anything that's volatility related, as in fear gauge related, if this is going higher, more often than not, your stock market's going to be falling. So That's usually the correlation we see. I mean, this was our huge spike in volatility in March, and you look at how that equated and translated into stocks. Stock market fell like crazy, right? So I'm watching, right? We're watching all these instruments because this is how we're going to make decisions over the next, couple of days, next couple of weeks. With the stock market and the overall sentiment, we'll be watching currency pairs to see which is risk on and risk off, and what that overall tone is. And then we get into currency pairs. I'm still liking the Aussie for weakness. Here's the Aussie CAD. We're now starting to turn the corner nicely, and hopefully our higher time frame will continue to show us promising signs. We have a ton of indecision here on the Aussie CAD, and I am expecting this to drop down. So we have, some really nice overbought conditions, which is right there. We're seeing this disagreement between price and momentum as we make a new high in price. We disagree with momentum. I'm looking at the very least for this to come back down and try to test these lows around 9,100. That happens to be my entry. I have an entry at 9,100. I sold it again at 91.80 and 9,400, and I'm going to, this is Benji, by the way, and I'm going to hold those shorts and try to get my break even at 91 back to it. So if I can close out at 9,100 or better, then that's a break even trade. That's in profit, and I'll take some profit there. New Zealand CAD is another one that I remain short, and I do like that one, so I'll hold short on that as well. Same thing. You can see some similarities on this one. We've gone, pretty quickly to the upside. We're seeing multiple days of indecision. If this goes any higher, okay, this area right around 8,900 to 9,000, I am still a seller. I think this currency pair will balance nicely. If it doesn't go higher, we should see this indecision allow this currency pair to fall back down. Perhaps this is the high that holds resistance. All of these are lows that hold support. So we could be in a range if we start heading down this week. We could be in a range holding from around 87.50 or so, maybe 8,800 tops, fall back into this 85.50 as a midpoint, fall back into around 8,300 as support. So this could be setting up, if we don't go any higher, for a resistance point down to lows. We could have resistance to support on the New Zealand CAD. One pair that is starting to turn the corner, I have been patiently waiting for it because I didn't short this one. This is Aussie New Zealand. I know some traders in my trading room were short at 10800, 108.25, shorted at equal highs, had some pips to the downside. There's highs around 108 and change. We had a low around 105.80. Now I'm still looking for 10500. If we can somehow, we're just starting to carve out some fresh lows. Hopefully this is allowing the bears to take control. We take out this low, we take out this low. We are breaking the structure overall. So if we can hold this area, have some indecision, push bearish again on this Aussie New Zealand, I'm waiting here to buy it. I'm not selling it. Okay, I'm more the long term. I'm going to hold this thing from 105, 104, 103, hold it long, and try to take this up towards 110, 112, 114, and look very much kind of medium term, long term on this Aussie New Zealand. But I'm going to wait to see if we can get down into 105 before I start buying it. Other pairs here. We had some really great trades last week. It was a week that came with a lot of preparation. We had some overextended conditions. I think we did a really good job of maintaining our, number one, our analysis. Number two, managing our robots. We had some automation that picks up some trades for us. So we had trades that were long here, and all I kept saying was protect, 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 protect. And then we got short only. And last week I said protect, protect, protect. So how did that translate into results? This is straight out of the trading room. So we had a lot of wins, partly robot, but also some big chunks of profit. We were looking at Aussie weakness last week. Aussie Swiss grabbed some profit. Aussie Yen grabbed some profit. Euro New Zealand grabbed some profit. Euro Yen, Aussie Dollar, and Dollar CAD, Dollar Swiss also grabbed some profit. So there was a pretty decent week last week. I think we were up something to the tune of, took a small loss there on the Dollar Yen, but added that big chunk on the, I can't see it here. There it is, 1,500 pips for last week. And again, all that was also on the stacked orders of the dollar CAD, which I was really happy with last week. This did exactly what we wanted it to do, and it didn't take that long. I mean, we were in this trade since the FOMC news on Wednesday of last week, and I was buying it, and I was looking for a balance move around 35 or 36.50, and we talked about stacking orders on the way up so we can make our wins bigger, and we did that. So that currency pair right here, Aussie Yen, Aussie Swiss dropped nicely. I just wanted to safely protect. So I said we should be getting back to around 7,200. We had lows That low was 72.60, and it looks like the low from Friday was 72.50. So within 50 pips of our safe take profit zone, traders are taking profit. So it's try not to hang on and be greedy and hit every single pip to the downside. Instead, we had a nice probability. We took lower time frames, took some nice trades, and protected last week. So this week, as kind of Monday kind of resets, we will evaluate. If we start to see risk-off trading, we will get some robots redeployed and activated once again. But something tells me that perhaps this is going to still fight a little bit. Maybe we have more of a rise wedge. Maybe we're indecision. Remember, this is the middle of June. This is arguably summer trading where there tends to be lower volume, more range-bound behavior. So unless the stock market's going to start moving like crazy, our currency pairs might also be pretty tough to see a ton of movement. But we'll be ready. All right. So Aussie, New Zealand, or Aussie yen, Aussie Swiss look very similar. Aussie dollar also look very similar right here. You can see that we had this, channel to the upside, a really nice rising wedge at the top, and we were talking about shorting. So you can see what we had, right? We shorted it based on the break. You shorted it at equal highs. All great price action examples. We break, we retest the high, sell it at that equal high. If I'm not mistaken, that was FOMC. Right there, that candle might have been, this is a 4-hour chart. So yeah, that's 1 p.m. That's during FOMC on Wednesday of last week. So that's your rate decision for the U.S. That's a press conference from Jerome Powell. And price action wise, everything just kind of fell into place. We actually had some more exposure than I wanted. We were trying to think, looking to short the euro dollar. We were looking to short the pound dollar. We were short actually the pound dollar. We were already short the Aussie dollar. We were already short the New Zealand dollar. We were already long dollar Swiss and dollar CAD. So we had some dollar exposure. And I was thinking like, well, this FOMC could be really good for us or really bad for us. And fortunately, it was really good for us, and pairs worked out really nicely. And again, price-wise, everything fell down to where we wanted it to fall, which was right back in here around 6,800. We had lows around 6,780. So again, taking profit. This was a sell at 70.20, got filled, and that was taking some profit. So that Aussie dollar last week was closed up here for 176 pips. The dollar CAD was closed up for 411. And I'll show you that dollar CAD really quickly because that was one of my favorite trades last week, and it didn't even take that long. So this was from a higher time frame. This was the trade. So we had, we were watching the correlation between dollar CAD and US oil, and I have a ton of notes in here that I'm going to try to help you figure out. But we were taking some small trades. Now that's the key here is small trades. So I started to buy this around 35.20. I added to it during FOMC, and I was looking for it to get back into this green box. So on a smaller time frame, you can see the structure. I was trying to get traders to understand that, look, we can keep falling. We can keep falling to the downside. We're going to take these little small tester level trades. But there was a lot of past support around 33.50, and it happened to hold. So that past resistance became future support. We broke the trend line over here. FOMC helped us cooperate from Wednesday's close to Thursday, Friday's move. And by Thursday to Friday, we were up into that green zone, allowing us to take some profit. Now, what I talked about last week, not only with a couple of our smaller trades, but we talked about adding to winning positions. So we had some orders stacked to the upside, and this is called a buy stop order in the Forex market. So 35.25, 35.50, 35.75, 3600. Our target was 36.50, right? And so last week, you can see that high was 36.65. That previous candle, I'm trying to get that green candle there, should have been right about the same level at 36.60 or so. So right here you can see protect above 36.30. We were talking specifically at 36.60. So if you have these orders stacked in and it's running to your profit target, this is a winning trade. That's a winning trade. That's a winning trade. That's a winning trade, as are these. So we were able to kind of combo and stack up those orders, make it for a bigger win. And that's why on Thursday, Friday last week, as soon as we got into that profit window for me, I was closing. So really happy with the result on dollar CAD. Now I'm not doing anything. That was a nice chunk last week. A lot of traders with me, had personal bests. We had, 1,000 plus pips for the week. I had one trader that had over 2,000 pips. We had 1,800 pips, 1,500 pips. We had a ton of winning traders last week in the trading room, which I love to see that. And a big shout out to everyone that continues to just take names and kick all sorts of butts in the financial markets in our trading room and just in general. So keep up the good work, of course, but that was a good trade there. Let's see here. What am I looking at for pairs this week? If we can get a setup on Aussie New Zealand, very interested in that. I'm also looking for Aussie CAD to continue to slide lower towards 9,100. I'm going to assess the Aussie Swiss and Aussie Yen and see if we start to redeploy robots on that. The CAD Swiss, We had a pretty severe fall last week, and I'm not in this trade right now. We took some big profits on this one around 71.40, but glad we took profits. And if this structure is breaking, not sure what happened there. Give me a second. If this structure is breaking there, then we break, we retest, and we possibly end up sliding lower. If there's risk off trading, we should see the CAD Swiss slide lower. Now, I don't know if I'm going to short that. All right. I tend to be on the, I like to buy against the Swiss. So CAD Swiss at lows, Aussie Swiss at lows, New Zealand Swiss at lows, dollar Swiss. I love to buy it against. So I'm not a big shorter of anything with the Swiss in it, particularly because it costs me money to hold it. And also, I mean, if there's technical reasons to hold it long, I will. And from a long term perspective, I'd say medium to long term, I think CAD Swiss has a better chance of going up in the medium to long term. They're just coming back to retest some of those lows. So what I'll be waiting for is if this structure ends up coming back down, is I'll be looking for confirmation, not necessarily buying it at the lows. All right. I certainly don't want to get stuck on, hey, it's at support again. But if we're in the midst of a round two coronavirus risk off environment, there is no safety right here in just throwing in a buy trade. So what I might do instead is wait for a trend line to break. I might turn on a robot to buy only, so it helps me trade confirmation as opposed to getting stuck in thinking like that's the bottom. I don't want to do that. I did that in March and ended up having to manage my way through some drawdowns, which worked out fine, but it took all of a month, month and a half to do that. So I'd rather not repeat that. Right? We can learn. We can learn from our mistakes. So anyway, if it comes back down to the lows, interested in buying, but I do want confirmation to buy it. That could be a robot trade. That could be confirmation for bullish candles or bullish symbols, whatever. But if it's not there, I'm not going to take the trade. So I'd rather wait and buy CAD Swiss long and long term to get all the way back up into 7,600, possibly even 8,000. But that's very long term. All right. Yen pairs, like I said, yen pairs I'll be assessing. Swiss pairs will be assessing. Euro Swiss, I still have some exposure on. We took a big chunk of profit on the Euro Swiss between 107.50, 108.50. We ended up seeing some highs around 109, and then we had a very dramatic fall last week. Now, I still think on the daily and weekly chart that we're looking for a minimum three-wave move to the upside. So this could be wave 1, 2, 3 is what I'm looking for. Now, it will be interesting. This week we have the Swiss National Bank LIBOR rate decision. It pops up on the calendar here with the press conference and monetary policy assessment. If I show you medium impact and low impact, that's going to be on Thursday this week on the 18th. You should see a LIBOR rate decision on Thursday. There's the financial stability report, the policy assessment, press conference, policy rate expected to stay the same at negative 0.75%. Again, what is being said in the press conference? What's the policy assessment? The Swiss franc overall, from a technical standpoint, is still a very strong and one could say overvalued currency. But in the times of risk-off trading, it might seem like all bets are off in a risk-off environment. We could see the Swiss continue to get stronger despite what they say. We could see the Swiss franc, do nothing with the interest rates. We could see even cut rates, and it really doesn't affect the price until later. So just be careful. I know that the last 2 or 3 weeks we actually saw some brokers increase margin requirements on Swiss franc pairs. So trade size is incredibly important. Make sure you're aware of your margin and your exposure, and just try to trade what you see and trade good confirmation. So I don't really see the press conference or the narrative from the Swiss National Bank changing, but depending on what we see for risk off trading, the Swiss could still be a very strong currency pair with the yen as well. The yen can be very strong. The Swiss can be very strong. So I'll be watching those pretty closely this week. We also have a Super Thursday. Actually, it's more of just a rate decision for Thursday for the pound. Asset purchase facility, the QE and the bond buying has gone up in the UK. The votes from the Monetary Policy Committee expected to remain the same at 0.9, so unanimously keeping rates unchanged at 0.1%, which was a cut from earlier this year. Back in March, when coronavirus was pretty much forcing reactive monetary policy measures from all central banks, the Bank of England cut rates very quickly from 0.25 to 0.1. They did talk about possibly seeing a cut again over the next couple of months, maybe even into September, seeing this at 0%. So the race to the bottom, the accommodative monetary policy is still very much at the forefront of central banks right now. And does that change anything for the stock markets? Not necessarily. I think that's just kind of allowing banks to hopefully survive. But we're right back in that same cycle of what did we see back in 2018 with the U.S. central bank raising rates and other central banks wanting to raise rates, and they just couldn't. So inevitably, I mean, central banks and banks across the world, it's very difficult to come off of this super accommodative. Low interest rates, zero interest rates, some even at negative interest rates to start to normalize. And just from a fundamental perspective, it just makes one think, what else can a central bank actually do? You can print more money, you can cut interest rates. What else do you have to offer? And that kind of seems like that's all we've been doing since 2012. So to get back to normal, to see the U.S. central bank raise rates back to a 0.5%, 1%, 2% like they were back in 2018, I think we're a long ways off of that for right now. So I would expect lower interest rates for the next probably 6 to 12 months easily. We might be taking 1 to 2 years to have this kind of U-shaped recovery. That would possibly get us through a recession period. I mean, bear markets tend to be fast and furious and aggressive and over within 2.5 years. But we want to make sure that the recession doesn't slip into a depression. But anyway, that's Thursday for the Bank of England. Friday we have core retail sales out of Canada. Really, if I just go high impact for the week, it's not a ton of news, but it is pretty noteworthy. So we have our employment news from the UK. We have core retail sales out of the US. Powell is actually testifying, so semi-annual monetary policy report for the Senate Banking Committee. Okay. CPI for the CAD. Powell again. That's a 2-day testimony. New Zealand dollar GDP for the quarter. Aussie employment, that'll be good short-term volatility on Wednesday. That's going to be Thursday's trading day actually, but Wednesday night Eastern time. Of course, early in New Zealand and Australia. And then Thursday, Swiss National Bank early in the morning during that London session open, and then at 7 a.m. during that U.S. and London transition, we're going to see the Bank of England rate decision and asset purchase facility, all that good stuff on Thursday. So Forex wise, fairly busy. Earnings wise this week, I didn't see much in stocks. I don't see major earnings for this week, but I want to do a little bit more research on that. Let's see here. Go back to our currency pairs. Euro Swiss, hopefully we have a 1. This was a corrective wave 2 pushing up. I'm still targeting 110, 110.45, 11100. There's a yearly pivot at 110.45 that I think the Euro Swiss will end up hitting. Overall, we might have a big range from 120 all the way down to 105. And even if we get back to the midpoint, just do the math here. 105 to 120 is 1,500 pips. So if we go 750 pips different, right? If you have 1,500, split the difference, that's 750. So we'd still get to around 1,250 as a halfway point. So I'm looking at a yearly pivot around 110, 110.50. So I think we can get there. That also gets us back into challenging these levels here. What else do we have? Euro dollar. Let's talk some of these big majors. Euro dollar with the trade room last week, we saw the euro dollar, creeping up to these highs. I wanted to put in a sell trade right at the high around 14.58, 114.60, and we didn't hit it. So it may not be done. We might see one more push to the upside for a double top. If it comes back up to these highs again, we may consider a short and adjust this position. Otherwise, my pending sell is at 1460 with a stop above 1500, and I'm going to go back after this range around 110. That remains a pending order for this week. Pound pairs, pound Aussie. Let's take a look at some of these pound crosses. And I want to get into oil, gold, silver, and cryptos before I wrap up for the weekly outlook and get this posted. Right side of the trend line for the pound Aussie. To me, this looks pretty darn good to stay bullish on. I have some robots deployed to buy only, and just getting back into a corrective move on the right-hand side of the trend line. Just some really typical price action. We get on the right-hand side of the trend line. We either retest and then head higher, or we have our break already happening. We might have a little indecision here on the right side of the trend line, then we go higher, or we use the backside of this trend line, test the lows, maybe go a little bit lower, use the backside of the trend line as a slightly lower low but support with disagreement and oversold conditions, and we still go up to the upside. So if I had a directional choice, I would say I'm going to be long pound Aussie and stay long pound Aussie until we get towards this 189 to 1.90 corrective level. So that'll be this week, just maintaining deployments on pound Aussie. Pound New Zealand is another one that I remain long on, and that goes for also Euro Aussie and Euro New Zealand. I've been long on both of those with some robot trading, so looking to grab some pips this week on them, and I will be protective. If my my pound Aussie comes back to 1.90, I'm going to start closing things up and taking profit. If my pound New Zealand comes back up into 2.00, I'm going to close things up and start taking profit. So I will be protecting profits, this week if they're offered. I'll be really selective, even going after today. I mean, using this weekly outlook to assess what I'm doing for the week. I'm going to let kind of trades fall into my lap and maybe do some scalping this week, but be really protective of 20, 30, 50 pip wins. And we'll see what kind of the bigger picture gives us. We'll see what the stock market's doing, what sentiment is giving us, what volatility is doing, all the good stuff. Pound dollar. This was a good trade last week. We also shorted and protected. I was a little bit, not nervous, but I was just a little bit annoyed with how this was behaving going into FOMC last week. Fortunately, it worked out really nicely. We were looking to get back to 25.50 and lower. We had, in fact, a low from today at 24.50. So we ideally want to get to around 23.50. Let's go back. I've got a big harmonic pattern here, and you should see how this price played out a little bit. So we had the 38% hit. We're right in here off some of these lows around the 50%. I went ahead and just protected some profit last week on that around 25.50. That put us in a trade. We were at 26.10. So that was a 60 pip win. We were at 27.50. That was a 200 pip win. I went ahead and took some profit on that last week. That is right in here, right there. So 260 pips on the pound dollar with 2 trades. Definitely happy to take that. New Zealand CAD, look for that to continue to go down. The dollar CAD, I'm looking for a clean trade in the dollar CAD this week. I think we did a great job getting those profits to pay us last week. So overall, I think I can clean up my analysis here since all my pockets were hit, our profit areas were hit, our add-on trades, all this good stuff. So what I see on the dollar CAD is this resistance around 33.50 is what offered that support. We're probably going to head back up, and it might be a little wave pattern. We might have a 1, 2, 3 wave move back into 38.50. So we might have a chance to, buy a retracement and head higher into 38.50, take some profits. This could be a range bound trade on dollar CAD. We could go from 33.50 to 38.50, possibly some range bound conditions there. We can get some robots ready to go, or we can just, sell high at 38.50, buy low at 33.50, and see if we can pick up a few trades on dollar CAD. Dollar Swiss, I'm going to continue to look long in this one. So I'm still holding from 95.50. I took a short-term trade last week off of FOMC lows, ended up grabbing about 190 pips out of that. I think that's what it was last week. Let me check. So I ended up buying it around 9,400, and we got back up into 95 and change. So not 100, about 120 pips. So I ended up grabbing some profit on that last week. So I still have 95.50 in. If we come back to these lows, I will take one position. I will add another position, and I'm still going to hold it to this area around 96. I'm going to hold it to this area around 96.50. So I still like dollar Swiss to the upside, and this is another one that medium term, long term, I'm going to continue to hold. Here's the daily chart on dollar Swiss. I'm still going to buy it at 92.50 as well, and just hold this one for a bigger range. Let's talk oil, gold, silver, cryptos, and I'll let you go to get back to your respective days. Oil creeping up into that profit-taking zone around $40. We had highs last week right at 39 and change. I think, in fact, it was just shy of $40. There is a high at $40.40, currently trading at around 36 and change. Expect $40 to hold. Between $40 and $42, major technical resistance. So I would expect this to be holding nicely. Maybe we have one more test of the highs, have some nice disagreement between price and momentum, and then fall back down. I think between $40 resistance, maybe $20 to $15 support, we're going to find some range levels on oil to continue to operate. There's going to be some, we obviously had a very extreme move in oil. We had one of the, largest sell-offs ever. Futures prices have never been priced in at negative cents before. And then we had one of the largest single-day moves, followed by one of the single biggest slides to the upside in the recovery back up into that technical gap. So even despite all the wild price action, and that's why with all the news and all the things we start off with these weekly sessions, look, I throw some fundamental awareness out there, but at the end of the day, as a trader and investor, it comes back to the technicals. And, oil was as technical as it gets. I mean, it was pretty nice to buy some beat up oil stocks and get paid on those in March and April. And, oil did what we needed it to do. We saw some great recoveries on commodity-based pairs and Forex like the Aussie, New Zealand, and the CAD. And it was nice to trade. So, technicals definitely help us. And, all the news and all the fundamentals that are out there and all the noise that's in the markets tends to just kind of align with the technicals and make them, when the news lines up with the technicals, things move faster. That's what we're going to look for this week to see what volatility does. I mean, if we have bad news and a bad news cycle, and there's pessimism out there and negative sentiment, then we're going to see higher volatility and fear in the markets. A lot of times that fear is fast and it's also irrational, and it's good for us to be scalping that and take some good short-term profits and don't try to level in and fight it. I'll go back to this. I mean, we've had this kind of oldie but goodie clause, like if you were to trade March all over again, and it's going to happen now in June, what would you do differently? And that might be a conversation I have this week in my trading room. Is we'll kind of revisit, like, look, last week was the first real punch that the markets experienced in the nose when it sold off, 5% last week or 4% last week. So if that's going to continue, we're going to see a lot more fear and volatility in the markets, and that will help us, make some decisions in our trading. So that's oil. Let's go to gold and silver. So I should bring up silver first. So here is XAG. We're just shy of those highs, man. I just want to take profit on silver. I've been in SLV for over a year now, trying to get back into these previous highs from 2019 and early 2020. This is XAG USD. I'm looking to get this back up into 19 bucks. We had highs around 1960. So anything back to those previous highs, I'm going to cash in on silver. Gold just can't break the highs at 1750. So this is really to me, this is kind of a dead zone. I wouldn't touch gold at all right now unless you want to range trade it. I know that, if you can trade gold as an instrument and go after some pips, it's a pretty straightforward trade. But I would also be nimble to say, hey, if we break higher, stay with that momentum to the upside. If we break higher in gold, expect the stock market to also be sliding. Or we see that there's some decent footing and stability in the stock market, and then gold officially breaks down below 1700, and we end up falling back into some nice technical corrective levels around 1500. But you can see right now that it's just holding really firm. Resistance at 1750, support at 1700, and it refuses to budge. But there's momentum to the upside. There's technical reasons to drive lower, but you need price confirmation. Look for price to break between a daily and weekly candle above or below. If we break above, I would stay long gold. If we break below, I'd look short gold. But both plans would come with a stop, because I think this could be a pretty strong move coming out of this. Look, this indecision is not going to last forever, right? Gold is going to go somewhere else. So it's either going to be bullish, it's going to be bearish, but it's not going to stay in here forever. So if you're trading this range, that's great. Profit from it. But when it breaks out of this range, be willing to follow along and pursue that momentum. All right, cryptocurrency here. Here's Bitcoin hanging tough around 9,300, pretty sideways movement. We talked about this quite a bit. My thoughts are this: as long as we stay above 8,150 and we kind of hang on to this semblance of a head and shoulders move, then I'm looking for the right shoulder over here, which might be noisy, but I'm looking for this right shoulder support to build, and then we have another leg up. I'm looking for the big number at 10,000. If Bitcoin can break above 10,000, that is, at least to me, the clear move for the bulls to go higher, come back to this 2019 high around $13,700, and possibly make a really convincing run back to 2017 highs, which was at 20K. That can make things very interesting later this year if we are going to see a big wave of movement on the cryptos. Same goes for, if Bitcoin leads the way to the upside, expect Ethereum and Litecoin, Ripple, all of your kind of major coins to follow. And we'll see. But there's certainly not a ton of excitement on cryptocurrencies right now, other than, I would like to think that the posture is bullish. I'd like to think that the pattern is there. I'd like to think that the technicals end up playing out, and I'm looking to stay long on my crypto wallet. So that's it, traders. Thanks for being with me for this weekly outlook. Again, look me up on my YouTube channel. Like this video. I appreciate that. I know that YouTube loves it as well, for the algorithm for my videos to get some additional recognition. It helps me grow my channel and keep videos like this coming to you for free. So thanks for being with me for today. Have a great week trading. If you're in my trading room, I'll see you tomorrow. If you'd like to get into my trading room, you can send me a message on Instagram. You can send me a message on YouTube, and I have links to join my trading room. You can try it for a month. I know we had traders that just last week, for the first time, took some great trades. They're after a week of like, wow, that's really overwhelming because you talk really fast. Within a week, they see that we do the same thing every day. We go through all of our pairs thoroughly. We cover a lot of information. We make sure that all the trades are detailed and it's easy to follow, and we have traders that are making money. So that's the whole point. And me tracking these are not just like trades that I place in my own account, which they are, but these are also trades that we openly talk about every single day in the trading room. So all of these profits that I'm showing, and it's, traders are posting on Facebook and social media how well they're doing, they're sharing with me in our webinars. It's we're just talking about it. So we are, transparent. We're making good profits. We're doing the right thing, and it all comes back to good equity management, good trading decisions, follow the technicals, and just keep grinding. All right, so we'll do it this week. We'll grind it out as always, and I'll see you in the trading room, everybody. Have a good week, and if you have any messages for me, let me know. But like the video, subscribe. I'll see you soon. Take care. Bye.